I think NFTs are going to be a framework that we trade in, collect in, utility in, access in for the rest of our collective lives.
Joining us now is Gary Vaynerchuk, chair of VaynerX and the CEO of VaynerMedia. Welcome, Gary. Welcome to the show.
Thanks for having me. How are you guys?
Yeah.
Great to have you. Great. All right. So, we just had Beeple on last week. We have Metaverse, the buyer of his $70 million NFT, later on in the show. Are we in an NFT bubble? What are your thoughts on that? Beeple said he thought we were. Do you agree?
I do. I think that we are in a very similar place to where we were in internet stocks in 2000. I think when you have these massive transformation technology shifts, there's a moment where everybody gets excited about it. And, for me, the internet was happening in 95, 6, 7, but you started to really see the stock market embrace with those IPOs in 98, 99, and then obviously in March, April 2000, you had the collapsing of it. At the time of the stocks, at the time, a lot of people talked about the internet being a fad and it never being meaningful for businesses, blah, blah, blah. What happened in reality was the internet was this game-changing revolution of technology, but a lot of the early projects were just overpriced on the excitement. I think we're absolutely in the replication of this. I think NFTs are going to be a framework that we trade in, collect in, utility in, access in for the rest of our collective lives. But I think some of the projects that you're seeing right now on the individual pieces are going to burst.
So you have a long experience in marketing and are obviously quite skilled at that. Until recently, Bitcoin was widely considered to have a marketing problem. Like people just didn't get it. Like the mainstream just didn't get it. Now that's changed a little bit just because of the price. But if you had to give kind of like the elevator pitch for Bitcoin, like the quick marketing soundbite, what would you say? Like how would you sell Bitcoin to the masses?
To me, if I was selling Bitcoin, I would speak about history. Why did gold do X, Y, Z? Why did fiat happen? Like, what is the human psychology to acceptance? I would speak about things that could happen, like what if Amazon accepts it? What if XYZ country invests aggressively at it? So I think there's a lot of logical steps to continue the affirmation and confirmation of the currency. And I think history has proven that. And I would use history and examples of one domino effect that could change the outcome for the people that are cynical about it.
So to follow up on that, how would you market NFTs? If NFTs, like right now, there's all these people being like, why is someone spending $70 million on a JPEG? Like if you just had to quickly explain to somebody what the value is of an NFT, what would you say?
I usually go down the route of, do you know somebody who's bought a Fortnite skin for $100, comma, do you think a blue check on Instagram is worth something, comma, I educate them for a minute on the metadata on the NFTs and speak about access, membership clubs, VIP treatments, one-on-one dinners, and talk about all the charity events and things that are sold when people get access to things that they can't get access to.
So getting back to the topic, keeping on this whole idea of the NFT bubble, et cetera, nonetheless, NFTs, how would you translate that into the real world? How would you translate, you've been in the business of selling physical goods. So how would you translate the NFT from intellectual property into the physical world? How will that come about?
I think people are really underestimating and undereducated on the smart contracts. And the reality is you could sell the digital asset, then deliver the individual, the physical good. But then in the smart contract, let me give you an example. If I decide I have a book coming out in November, but then I'm a free agent and I was going to sign another book deal. Now I'm debating, should I just NFT my book after that? Print 200,000 copies, make an NFT replication of the cover, make 190,000 that look exactly like the cover. And if you buy it for $20, the NFT, I send you the book. It's literally, and you have now this little digital asset that you might be able to trade on to make some of your dollars back or what have you. But then there's 10,000 covers left. 9,000 of those can be silver covers, and they may be $100. But what that does in the smart contract is it allows you to be part of my book club. And once a month, once a week, whatever I decide in the smart contract, I will go with that small group and do Q&A and learnings. That leaves 100 gold books that might be things like one-on-one dinners or a live conference, and maybe one platinum book that is somebody that gets to spend a month with me. The access underneath the smart contract, I think, is going to end up being the aha for a lot of people as they become more educated, that it's not just a JPEG. Not to mention, people care about the ownership of provenance. And as that becomes social currency and the way we live, it's no different than in 1999 when I told my friends that everybody would online date and they laughed me out of the room. They were unable to see the chess moves to how society would evolve. I believe in 15 years, people are going to look at people's public wallets to see what they have bought to become a conversation piece or a social currency layer, the way that logos are, the way that followers on social media are, the way that your Wikipedia or Google search results are.
That's funny you say that, because I'm about to do that right now with you. Gary, you tweeted in 2013 that you just bought, using Bitcoin, Google Smart Pants and had it delivered by a drone in 21 minutes. First of all, must be a very expensive pair of pants in today's dollar terms. And second,
Yes.
you know, what was your experience with paying something with Bitcoin? Should it be used as a currency? What are your thoughts on that?
I apologize. My experience was in 2013.
Bitcoin,
go ahead.
Yeah, should Bitcoin be used as a currency?
It is. It's not even a should. This is not about predictions. People accept Bitcoin all the time. It's already happened. The question becomes, what happens next? I think this, Bitcoin is so much further along than the majority of things that have come before it as an accepted currency. To me, I don't get to say, nor do most humans get to say what should or shouldn't be accepted. If enough people believe in it, then it becomes. I always remind people, somebody used to live in the world before gold meant anything. We didn't have great documentation, but gold was a created ecosystem. Should gold be accepted?
What should be the currency of the world, is my question to you.
Whatever enough of the people in the world accept, right? Humans create their ecosystems. I don't think this is a game of should. This is a game of how has it always happened. People used to trade berries for sheeps. People used to trade furs for people. People used to trade high-end wine for workers to build things. I mean, I laugh at people's naivete to think what is going on today or what we grew up with is the end-all, be-all. That's just laughable. The human race will continue to evolve. And if anything, I think it makes more sense that things that are digital become the currency as we go that route as a race.
Do you see Bitcoin becoming the currency of the world that everyone will start using? And
I like to answer things that I understand, and you can see the conviction I come in on the other questions. I really don't know. For me, the reason I've gone harder into NFT than, let's say, currencies is because I just enjoy it more. I wasn't the kind of person that really traded equities my whole life. I haven't spent the meaningful hours that I think other people have around really being able to answer that question. What I can tell you is people are naive, and if they don't understand that a shocking number of people have accepted this. I think there's a lot of conversation of what happens to the dollar when it goes off of the gold standards in the 70s. I think there's a lot going on with our society and our relationships with governments. And I think the ingredients are in place for Bitcoin. And, you've got to understand, if Bitcoin hits and becomes a currency of society, well, that leads to a lot of other currencies and a lot of other variables like NFTs to also follow suit. And it creates a real digital finance economy.
So for a long time, people have been getting really frustrated with our current social media platforms, in particular Facebook, right? In terms of, keeping our data, selling our data, individuals having limited control over these sort of centralized platforms. But we still haven't really seen anything truly disrupt the current model, the sort of Facebook, Twitter model. I guess my question is, how do you see the future of social media? And do you think blockchain technology will play a part of it? Do you see a decentralized social media coming in the future?
I do see a decentralized social media. I do think on the flip side that our great disgust with Facebook Inc. is more of a mainstream media headline than reality. I haven't seen this grand exodus from Instagram because they sell our data. When you talk to normal people, it's like talking about DeFi or Bitcoin or NFTs. Most people speak about it from a headline standpoint, but can't actually articulate what they're so upset about. When they quote unquote sell our data, it's not like people are surveillancing our life. They're creating a scenario where we are getting more relevant advertising in our feeds based on our clicks and our actions. This great propaganda that these machines are manipulating us is laughable. You can absolutely delete the app. So, they're two separate things. I think the reason you haven't seen anything too crazy is real life humans are not so up in arms for seeing root beer ads in their feed because they like root beer, I do think a decentralized central network is inevitable because decentralization is here, right? Like the technology is here and every aspect of our society will play on top of it.
So along those lines, do you have an expectation, for instance, for where the price of Bitcoin will be in a couple of years from now, based on just the overall change in the economy and how people view networks and how they trade currency, et cetera?
What's funny, my friend? I don't tend to predict. I'm very good at seeing something and then tasting it, using it, and having observations. Here's what I will say. I will say that I don't believe there's a middle ground for Bitcoin. I think it's so far advanced that unless you have government involvement, I think it will continue to go up. And then if you do have massive government regulations, if Russia, America, Europe decides to say if you are a citizen of our state, our sovereign nation, you are not allowed to hold this, I think you've got a whole nother bag of issues and who knows what comes out of that. But I don't think there's this middle ground for a very long time. I think you got another decade max of potential middle ground, and then it's going to space, or you're going to have real interesting unrest between citizens and sovereign nations.
So Bitcoin has had quite the year in 2021, reaching $1 trillion market capitalization for the first time in its history. And despite the recent sell-off that we've seen this month, we believe the long-term prospects for Bitcoin remain extremely promising, as we'll get into. Last year, some quite notable events. You can see from this chart a few events overlaid by price action. Some kind of worthy of mentioning include Tesla deciding to allocate Bitcoin on its balance sheet, an approval of both a futures ETF in the US and a spot ETF in Canada, suggesting an increased institutional adoption, and the first nation state, El Salvador, accepting Bitcoin as legal tender. Now, especially in times of high market volatility, we like to anchor ourselves to long-term fundamentals. And this year, we released a lot of research on ways to assess Bitcoin's fundamentals by leveraging on-chain data. And these two charts really show how strong holding behavior is and how long-term focused it is. In the first chart in 2021, you can see that while Bitcoin's market capitalization grew by 96%, its realized capitalization, or the aggregate cost basis of Bitcoin, grew by nearly 170%, eclipsing $450 billion. Realized capitalization is a good proxy for its kind of general support levels and cost bases for holders, and higher realized capitalization suggests kind of a higher conviction in the market. Today, while market cap is nearly 50% off its highs, interestingly, realized capitalization is still at all-time highs. In the second chart, Bitcoin's long-term holder base is also strengthening, as we've seen. An estimated 13.5 million Bitcoin is held by long-term holders, and there are more than 500,000 Bitcoin addresses that have received at least 2 incoming transactions and have never spent their funds, which is denoted as an accumulation address. Now, many criticize Bitcoin for not being able to support high transaction throughput, but fail to recognize that Bitcoin supports high economic throughput as a global settlement network for high value transactions. In 2021, Bitcoin settled more than $13 trillion of value, which is more than a quadrupling year over year. $36 billion was settled on Bitcoin's base layer daily, with an average transaction value of $136,000. In our 2019 Big Ideas, we highlighted how Bitcoin was within an order of magnitude of Visa's transaction volume, and this year it's officially surpassed it. Now, despite the criticism Bitcoin receives for not being able to scale at the base layer, we've seen successful enhancements across the network in 2021. Chief among them is Bitcoin's successful activation of Taproot, which is its biggest base layer protocol upgrade since SegWit in 2017. Along with the introduction of Schnorr signatures, Taproot increases the privacy and efficiency of Bitcoin transactions. The Lightning Network, Bitcoin's second layer payment protocol, has also seen healthy growth, with capacity and channels reaching all-time highs amidst adoption in emerging markets. And of course, last week, Block announced Cash App's integration with the Lightning Network, which should act as a further catalyst. And then finally, we're beginning to see traction of tokenized Bitcoin on Ethereum, which should benefit Bitcoin as a bridge to the Ethereum ecosystem, which adds features and functionality not available on the Bitcoin network. As of the end of November, 1.5% of Bitcoin's circulating supply is wrapped on Ethereum. One of the biggest differences between the 2017 and 2018 market cycle and the one we're currently experiencing is an increase in Bitcoin's institutional holder base. With the approval of more regulated products, with the adoption of Bitcoin by corporations and nation states, today, nearly 8% of Bitcoin's supply is held by exchange-traded products, countries, and corporations. Now, this, of course, is a double-edged sword, where institutional adoption might be a sign of Bitcoin maturing, but over-institutionalizing Bitcoin can, of course, lead to concentration of Bitcoin and additional counterparty risk. So it's really important to be aware of that dynamic. But perhaps the most groundbreaking institutional-grade Bitcoin adopter was El Salvador, which is the first nation state to deem Bitcoin as legal tender. Adoption there, according to the president's claims on Twitter, has been quite impressive. More people have Bitcoin wallets in El Salvador than traditional bank accounts, and an estimated 3.8 million people use El Salvador's Bitcoin wallet, which suggests an 84% adoption among eligible citizens. And as of October 2021, Chivo was settling $2 million in remittances daily, accounting for roughly 12% of El Salvador's $6 billion in annual remittances and more than 2% of its GDP, really showing how Bitcoin is acting as a remittance network. A prevailing narrative in 2021 that we attempted to debunk was Bitcoin's lack of sustainability. Contrary to popular belief, we believe Bitcoin is quite an ESG-friendly asset with the potential to transform monetary history by providing financial freedom and empowerment in a fair, global, distributed way. So on the environmental side, briefly, Bitcoin incentivizes new and more efficient forms of energy generation. On the social side, Bitcoin offers, for the first time ever, a system of property rights without reliance on nation states. And finally, on the governance side, and as we've described in the public blockchain section, Bitcoin is open, transparent, auditable, and predictable. Diving into perhaps the most scrutinized part of Bitcoin's claimed lack of sustainability is the E, or environmental concerns, due to its proof of work mining. We believe that proof of work is a necessary component of Bitcoin, where for the first time in human history, provides a way to directly financially incentivize the discovery of cheaper ways to harness energy, independent of location or consumer demand. So Bitcoin mining, which started off as a hobbyist activity, has now evolved into a full-fledged industry, which even nation states today are participating in. And it incentivizes new, more efficient forms of energy generation by offering a bounty that is Bitcoin to anyone, anywhere, at any time. In 2021, Bitcoin miners generated nearly $17 billion of revenue. Whereas in the past, generation was only economically viable in locales that were close to the site of consumption, Bitcoin mining allows us to develop power generation infrastructure in remote, energy-rich locations. And this is a boon for renewable energy sources, which have faced scaling and commercialization problems that can now leverage Bitcoin mining and play the arbitrage between electricity prices and Bitcoin prices. And as you can see in the graph, supply almost all grid power demands without lowering profitability. As the best performing asset in the last 10 years, many investors believe they've missed the Bitcoin boat. But if you look at it in the context of other asset classes, Bitcoin still only represents a fraction of global asset values. We believe Bitcoin's market capitalization could increase by more than 25-fold to $28.5 trillion of market value by 2030. And if it were to, it would still only represent a fraction of equities, global money supply, bonds, and real estate. Now, a $28.5 trillion Bitcoin market capitalization translates to more than $1 million per Bitcoin, which we further dimensioned in this slide by highlighting 8 use cases, each contributing to Bitcoin's potential appreciation. The largest use case, as you can see, still remains Bitcoin as a digital store of value competing with gold, but extends to other use cases like acting as a portfolio diversifier in institutional portfolios, an economic global settlement network, a nation state treasury, or an insurance policy against arbitrary asset seizure. Now, important to note here that Bitcoin's use cases are additive. There's a fixed 21 million Bitcoin supply cap. So for every Bitcoin that's being used as digital gold, it can't be used as a remittance asset or as protection against arbitrary asset seizure.